Being self-employed has a number of wonderful benefits, from setting your own schedule, to controlling your own income potential, to selecting the clients that you want to serve, down to even being your own boss. The list goes on and on. But if you're going to be self-employed, then you need to know that the tax system is not necessarily set up in your favor by default. In fact, you may have to pay a self-employment tax on top of your federal and your state taxes. So what is the self-employment tax? Well, back in the 1950s, Congress passed an act essentially making sure that people who were self-employed were paying their fair share into the Social Security system. Okay, so the resulting act created this new tax where a self-employed person was paying both the employee and employer's share of Social Security tax on their earnings. Later on in the 60s, Medicare became law. They went ahead and added this in as well. Okay, so what is the rate that you end up paying on this self-employment tax? So your entire business net income is subject to the tax. 15.3% is the amount, and that's actually made up of two main components. So 12.4% is the component for Social Security, and then 2.9% is the component for Medicare. So the Medicare tax is unlimited. As much money as you make, you're going to pay that 2.9%. On the Social Security side, it's actually capped at about $130,000 of earnings. And if you actually make too much money, they're going to put another 1.8% on top of this on your Medicare tax. It can be very punitive. So who ends up paying this self-employment tax? Well, many types of small businesses, including some partnerships, and almost all independent contractors get stuck paying this tax. It could really add up. So if you have $100,000 of net business income after deductions, you'd be facing a self-employment tax bill of $15,300. And that's on top of your normal federal and state taxes. If you're in a partnership situation and you have multiple partners, each partner could get stuck with that bill. So what can you do about these self-employment taxes? Well, there are some perfectly legitimate strategies in place to help take some of this burden away from you. But avoiding this tax is probably not the only reason you should consider some of these changes. There can be other benefits as well. So many small businesses will choose to organize or reorganize the business as a corporation or elect to be taxed as an S corporation. Both of these can have the effect of removing self-employment tax from the equation. So if you're in a situation where you think you might possibly be paying a larger self-employment tax than you should, or even have questions about how to reduce your own tax liability, give us a call. We'd be happy to set up a conversation for you.